Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. Nick Santiago is my guest, president and CEO of In the Money Stocks. Nick, thanks for coming back on the show.
Always great to be back, Michael. Thank you for having me.
My pleasure. Okay. Which one of these markets are we going to start with for that swing for the fence thing? Just kidding.
Well, you know, what I'd like to do first is possibly just talk about gold mining stocks today. I don't know if it's a swing for the fence type deal, but in any case, the gold miners are a little bit on the weaker side. I think they could be setting up for a little bit more of a correction and then actually setting up to go higher. So I'd like to see them pull back a little bit more, and I'd be real attracted to them around that $48.50 to $49 level, depending on how they get in there. But very good support even around $48.
Okay, somewhere, because we've got the convergence here on a daily basis with the 50 and the 200 period moving average right in that area.
Yeah. You have a little 50-day moving average crossover, crossing over the 200. I guess that took place right around the earlier part of October. But either way, just the way the pattern is basing, it tells us we should have at least one more move up. I think that's going to coincide pretty much with the holidays and a nice little inflation rally in the overall stock markets as well.
Let me correct myself. I misspoke.
Sure.
That was a weekly chart I was looking at. Sorry about
Okay,
that.
yeah, you're looking at the weekly chart with the 50 going into the 200?
Yeah, it looks like it's going to build some pretty strong support there down at that area you just mentioned.
Yeah, you should have pretty good support there. You also have a little bit of a rising 20 moving average as well. So really, if you look at the chart there, you're going to have three moving averages on the weekly chart basis, the 20, the 50, and the 200, all converging at some point in the near-term future, which makes for pretty good support. But overall, I don't think what I want to point out was I don't think the overall upside is going to be that much. But I think from that level around the $49 to $48 area, I think you could get a move maybe back up to 55. But I don't see this thing having the muscle or the strength at this moment in time to get significantly through there.
What about 2013 as we get into the first quarter?
Well, I have to see where this market pivots. If we rally up into, especially the gold miners, if they rally up into the first quarter of next year, then I'd be more inclined to think the sell-off is coming.
Okay, well, we got a few months before that hits. GLD next?
Yeah, GLD is a little bit of a different picture. Not totally different, but right now, gold looks to be making actually a bearish pattern on daily charts, which could tell us we're going to pull back a little bit more. Overall, it's had a very, very good move, obviously, from late June all the way up into the October highs. But I think this correction is good for gold, and I think gold for the near term is going to be range-bound because we did get that big, robust move really from June all the way up till October, a little bit premature based on the fact that QE3 was coming. But now that QE3 is here, I think this is just going to strictly trade inverse to the U.S. dollar index, which could be somewhat range-bound for a while.
Okay, so just to, scratching the top of my head, let me think here. Do you think that the range-bound price action we're getting in the gold market would be bullish for the equity markets?
Well, I think when gold goes up, the equity market's going to go up as well. So when gold makes a move to the upside, it's a sign of inflation, and when gold makes a move to the downside, it's a sign of deflation. As we know, the central bankers, and it's not just the Federal Reserve, it's also the ECB, Bank of Japan, Bank of England, they're all printing money recklessly, and ultimately it's going to lead to a big problem. But right now, with the way gold is reacting to me, it's telling me that the markets are even somewhat range-bound for a moment, and they're not going to make any big thrusting moves upside or downside.
Okay, all right. Well, let's look at this stock that you made us aware of a long time ago as far as a leading indicator, J.P. Morgan. I mean, that thing had a nice little move today.
Having a great move today, and the pattern, on the chart is still bullish. And as long as J.P. Morgan is holding up, ultimately the stock market's holding up. I did a calculation before I came on your show today, and right around the $39 level is still a ton of support for this thing. And you'll see the 200-day moving average is right around that 38.87 level, just below $39. So you have a lot of support still on JPM. The stock's having a pretty robust day, although it is starting to sell off a little bit as we speak right now. But either way, as long as that one holds up, that stock in particular, because that is a real, you can almost use that as an ETF of the financials these days. As long as that stock holds up, the major averages, they're not going to plummet with J.P. Morgan holding up.
Yeah, I was kind of curious about that. I flipped over to the banking index, BKX, and on a daily basis, and it looks like it just loved that 50-period moving average, went down, scrolled along with it for a couple of days, and then took off to the upside. It tested that 50. It actually, I guess, closed below it on one day about 3 days ago. It went to the $49 level, and now the BKX is moving higher. That one also has a ton of support around $48 as well. I mean, you could look at where it broke out basically on the 6th of September. So there's just a lot of support. But if we took out $48 on the BKX, I think then things would get a little bit more interesting. This banking index wouldn't look so attractive right now. But, I mean, look at Goldman Sachs today. Look at Bank of America. Yep.
Look at
let's look at Goldman Sachs for a minute. I got two really strong days right back to back off of a doji.
Goldman's been very, very strong right now. I mean, there's really nothing wrong with the chart. I think, max upside would probably be around the 130 to 135 level. But right now, there's nothing really technically wrong with Goldman right now. It's holding up very, very well.
So would that be a leading indicator beyond J.P. Morgan, a breakout over that high that occurred a few weeks ago or last month?
Yeah. The problem with Goldman is I don't see it really getting much past $130. Maybe 135 would be maximum, and that would be about it. So Goldman, it looks good on the charts right now, and it's holding up very, very well. But once it gets up to that level, take a look at 135, Michael. You'll see you have a weekly 200 MA right there. You also have a big breakdown bar from August 2011, which is going to be massive resistance, as well as a 50% retrace. So, I mean, Goldman at 135, it might even be a stone cold short.
Okay. All right. What about FXI?
Yeah, I want to talk about the FXI today because this is an ETF that traders can play if they want to play the Shanghai Index, which is the Chinese market. And as you know, China has been in a terrible, dreadful downtrend for a while, but the FXI today is catching a nice pop. China was up last night. And the reason why I even bring up the FXI, because when this stock is strong, generally you could also look for a move higher in many of the base metal names, such as Freeport-McMoRan, Southern Copper, Rio Tinto, BHP Billiton. All of these stocks will generally trade higher when the FXI makes a move. Or you could always follow the Shanghai Index itself. And last night that was up, I believe, 1.7%.
Well, I'm looking at the weekly chart on this FXI, and it broke out over its 200-period moving average a couple of weeks ago, tested it, and then bounced off of it higher right now. So,
yeah, and you'd have to give this thing the upside bias into around that, I'm going to say probably around the $39 level. Around there, traders, could watch for a lot of resistance and potentially a shorting opportunity. But I'm going to give it the upside for another buck and a half from here.
Okay. All right. We got 2 minutes left. I want your opinion on the S&P market right now. I've got a cycle day coming up on elections, the 6th, but the big one for me, if we don't get a crash on this thing, is the 11th, a possible run up higher into the 11th. But I wanted to get your opinion. You've threaded the needle so well on this so many times.
Well, as you know, I was looking for that around that 140, 141 level to get tested. I said a short-term bounce could happen there. Right now, I don't think anything significant. I know today the market's rallying up a little bit, but I don't think there's going to be anything really that significant until the election is over. Obviously, if Romney wins, the markets could be in for a short-term rally. If Obama wins, the markets could be in for a short-term sell-off. But I don't think it's going to be. I don't have any crash cycles penciled in right now, and I do think we're still due for an end-of-year rally with the holidays upon us.
Okay, well, I've got my personal intuition is a couple of days higher close over 1421 or 1420 area on the S&P gives me, my eyebrows start twitching at that. Maybe we may have something to this. What are your thoughts there?
Well, I definitely think it's possible. Like we said earlier, as long as those financials hold up, I don't see any real breakdown in the S&P. After all, there's a lot of money being printed by all of these central bankers, and they're well aware of what's going on the tape each and every day. So the way I look at it is if the market can make its way up to 146 on the S&P spiders, there's a significant level to get through. And if it got through there with any conviction, then, we could definitely go a lot higher into the end of the year. Right now, I think the market looks vulnerable here. We put in a little bit of I guess it was 5 days, the past 5 days, with the exception of today, a little bit of a bearish base. Today, the market definitely has a good little move, but there's no volume on today's rally. So when you get these moves up with little conviction, I know a lot of traders are still out because of the hurricane, and a lot of hedge funds and Wall Street offices are still closed. But we're still in a vulnerable position right here in the market. So I think everybody just needs to take it one trade at a time, trade the best chart patterns that you see, and that's really how you want to play it into that election.
Got it. All right, before we go, give us a way to reach you.
Sure. Come on over to inthemoneystocks.com. Check us out. Take a 7-day free trial to our intraday stock chat. You can see our screens. You'll also be able to ask us questions throughout the session, or else take a subscription to our research center. Also, we offer a 7-day free trial. Get all of our nightly setups, all of our cycle work, and you'll get to see everything that we do.
Thanks so much, Nick. We'll talk to you next week.
Have a great day, Michael. Thank you.
You too. Nick Santiago, President and CEO, InTheMoneyStocks.com. Coming up next.